Okay, so maybe you're kind of curious about crypto,
Mm.
but the whole buying Bitcoin thing seems a little intimidating.
Yeah, I get that.
The good news is you can actually get into this whole new asset class
Right.
without having to dive headfirst into all the technical stuff
Exactly.
and owning cryptocurrency.
Yeah.
So
Oh,
today,
okay.
we are going to be exploring how to dip your toes in the crypto pool
Okay.
through these more traditional methods
All right.
like ETFs,
Yeah.
stocks, and even credit card rewards.
That's right. There are actually a lot of ways to get exposure to the crypto market
Oh, wow.
without actually buying and holding digital assets like Bitcoin.
So when we say indirect crypto investing, what exactly does that mean?
So indirect crypto investing, it's kind of like tasting a dish without having to cook it yourself.
Okay.
You can still benefit from the potential ups and downs,
Yeah.
the growth of cryptocurrencies without dealing with all the complexities of owning them.
Oh, so it's less technical hassle,
Yeah.
potentially lower risk.
Yeah.
But I'm guessing there are still risks and fees involved.
Oh, absolutely.
It's like any investment.
While indirect investing can potentially lower some of those risks
Okay.
associated with owning crypto directly, it's still important to remember that all investments have risks,
Right.
and fees vary depending on how you choose to invest.
So you're saying the key is to do your research.
Exactly.
Choose the options that align with your goals.
Exactly.
So let's dive into some of these indirect strategies.
Okay.
I've heard a lot about crypto ETFs.
Yeah.
Can you kind of break those down for us a little bit?
Sure. ETFs, or exchange-traded funds, are basically like these pre-packaged baskets of assets
Okay.
that you can buy and sell just like stocks.
Okay.
And they offer a familiar and relatively easy way to access a lot of different markets, and now that includes crypto.
Oh, wow. Okay. That sounds pretty user-friendly.
Mm-hmm.
What types of crypto ETFs are out there?
Well, there are a few key types that cater to different investment strategies.
Okay.
So first we have spot Bitcoin ETFs, and these directly track the price of Bitcoin.
So it's like a shadow.
Yeah, think of it like a shadow following its every move.
Okay.
Some examples are ARKB, BITB, HODL.
Catchy.
There's even one with the ticker symbol BRRR.
BRRR. I love it.
Yeah.
What about Ethereum? Are there ETFs for that too?
Yeah, you're right. Ethereum's a big player in the crypto space.
Yeah.
As of May 2024, the SEC finally approved spot Ethereum ETFs,
Oh, wow.
allowing investors to directly track the price of Ethereum.
Awesome.
Before that, we only had futures-based Ethereum ETFs available.
Okay.
But now you can find options like the Grayscale Ethereum Trust and the Bitwise Ethereum ETF.
So with spot ETFs, I'm basically betting on the price of the cryptocurrency.
Yeah.
What about those futures-based ETFs you mentioned earlier?
Okay.
How do those work?
So futures-based ETFs, they're a little more complex.
Okay.
They invest in Bitcoin futures contracts, which are agreements to buy or sell Bitcoin at a specific price on a future date. So rather than owning the asset directly, you're kind of betting on where the price of Bitcoin is going to be in the future.
Got it.
Some examples are BTO, BTF, and XBTF.
Okay, so a little bit more speculative
Right.
than just tracking the current price.
Yeah. And it's important to note that
Right.
the returns from the ETF might not perfectly mirror the underlying asset,
Right.
and fees can impact your profits too.
That's something to really consider for sure.
And while spot Bitcoin ETFs and futures-based ETFs are considered exchange-traded products, or ETPs,
Got it.
the spot Bitcoin ETFs fall under slightly different regulations.
Wait, ETS versus ETPs. I
Yeah.
thought those were essentially the same thing.
Yeah, so that's actually a really important distinction in the crypto ETF world.
Okay.
When spot Bitcoin ETFs were approved in early 2024, the SEC actually decided to classify them as ETPs under the Securities Act of 1933,
Okay.
rather than ETFs, which are defined by the Investment Company Act of 1940.
Yeah. So I'm trying to wrap my head around all the legal jargon. What does that mean for someone like me who's just trying to understand this?
Basically, it means that spot Bitcoin ETPs,
Okay.
while they're still traded on exchanges like ETFs,
Mm-hmm.
may have less diverse portfolios and are governed by slightly different rules than traditional ETFs.
Okay.
So that means they could offer a more targeted exposure to Bitcoin,
Okay.
but potentially with less investor protection.
Okay. So it's important to understand those nuances.
Yeah, definitely.
Make an informed decision.
For sure.
So spot Bitcoin ETPs
Yeah.
might be a little bit riskier than traditional ETFs, but could offer more focused exposure.
Yeah.
Got it. Okay, so beyond ETFs and ETPs,
Yeah.
what other indirect crypto investment options are there?
Well, we can't forget about cryptocurrency and blockchain stocks.
Okay.
This is another way to get involved in the crypto market
Right.
without actually owning any digital currencies.
So we're talking about buying stock in companies that are actually using or holding crypto.
Exactly.
Ooh,
You
okay.
can invest in blockchain technology companies.
Like Riot, Blockchain, Canaan Inc., or HIVE blockchain technologies. These companies are building the infrastructure of the crypto world,
Yeah.
mining cryptocurrencies,
Yeah.
developing blockchain solutions.
Got it.
Investing in them is kind of like betting on picks and shovels during a gold rush.
So instead of investing in the gold itself, you're investing in the companies that are mining the gold.
Precisely.
Oh, I like that analogy.
Yeah.
Or I could invest in companies that are actually holding cryptocurrency.
You got like Coinbase,
Coinbase, okay.
a major crypto exchange.
Okay.
Their stock value can go up and down based on what the crypto market does.
Mm-hmm.
And they hold a significant amount of Bitcoin, Ether, and other cryptocurrencies.
That's pretty cool. So their fate is tied to the market even if they aren't directly selling crypto.
Exactly.
So are there ETFs for this too?
You bet.
Like a basket of crypto-related companies?
Several ETFs focus specifically on investing in those crypto-related companies.
Oh, offering a more diverse way to get exposure to the sector without picking individual stocks.
Nice.
However, just like with individual crypto-related stocks,
Okay.
volatility is definitely something to keep in mind.
Okay. So we've got ETFs that track Bitcoin and Ethereum directly.
Yeah.
We've got ETFs that bet on future crypto prices.
Right.
And now stocks in companies that are mining, developing, or holding crypto. Are you telling me I can get crypto into my retirement plan?
You heard right.
Rush.
Back in 2022, Fidelity made headlines by allowing Bitcoin in 401ks.
Wow, that's wild.
Yeah, it's still early.
Yeah.
But this could signal growing mainstream acceptance of crypto as a legit investment asset.
That's really forward thinking.
Yeah.
Okay. Before we wrap up this part,
Yeah.
you have to tell me about these credit card rewards.
Okay.
How am I earning crypto just by buying my groceries?
So it's actually simpler than you might think.
Okay.
We're seeing a growing number of credit cards offering crypto rewards instead of cash back or points. Cards like the Gemini credit card, the Crypto.com card, and the Coinbase card all let you earn crypto on your everyday purchases.
So instead of getting cash back
Yeah.
or airline miles,
Right.
I'm getting Bitcoin.
Potentially.
What?
And even the Venmo card lets you redeem your rewards for crypto.
Wow. Okay, so it's a seamless way to kind of get into the crypto world without making a large investment.
Exactly.
This is blowing my mind.
It's a dynamic landscape.
Yeah.
And new options are always popping up.
That's so cool.
But as we've discussed, it's important to know the pros and cons of each approach.
Yeah.
Choose what aligns with your financial goals
Totally.
and
Yeah.
your risk tolerance.
Absolutely. All right, so we've covered a lot of ground already, but there's still so much more to explore.
Yeah, for sure.
When we come back,
Okay.
we're going to take a closer look at the advantages and disadvantages
All right.
of these indirect crypto investing strategies.
Sounds good.
So don't go anywhere. Welcome back. So before we dove into all the different ways to approach the crypto market indirectly, we were talking about how you can taste the dish
Yeah.
without having to cook it yourself.
Right.
Now I'm ready to dig into the recipe,
Okay.
so to speak.
Yeah.
What are the advantages and the disadvantages
Right.
of all these different indirect crypto investing strategies?
Okay.
Let's start with ETFs,
Yeah.
since they seem like a pretty familiar entry point for a lot of people.
Sure. That's a great place to start. One of the biggest advantages of crypto ETFs is how accessible they are.
Okay.
You can buy and sell them just like any other stock.
Oh, so I don't need to set up a separate crypto exchange account
Exactly.
or worry about those digital wallets that everyone's always talking about.
Yeah, it can be pretty complicated.
Yeah.
And ETFs are generally more regulated than buying crypto directly,
Okay.
which can be a big plus for a lot of investors
Yeah, for sure.
who might be a little hesitant about the whole crypto market.
Right. It definitely adds a sense of legitimacy and protection.
Exactly.
Okay, what about diversification? Is that a factor with crypto ETFs?
Absolutely. Diversification is super important when it comes to investing.
Yeah.
And crypto ETFs definitely offer that benefit.
Okay.
Instead of putting all your money in one cryptocurrency,
Right.
you can spread your risk across a bunch of different crypto assets
Okay.
or crypto-related companies through an ETF.
So I can kind of get a taste of a bunch of different flavors
Yeah,
without overcommitting to just one.
exactly.
Are there any downsides to these crypto ETFs?
Yeah,
I know we briefly talked about fees,
yeah.
but what else should investors be aware of?
You're right. Fees are definitely a big factor.
Yeah.
Every ETF has what's called an expense ratio.
Okay.
And that's the annual fee for managing the fund.
Okay.
So you want to make sure you understand those costs
Right.
and how those costs could impact your returns over time.
Okay, so it's not just the price of the ETF itself, it's also those additional fees.
Right. And another thing to remember is that those returns from the ETF, they might not perfectly mirror the underlying asset's performance.
What do you mean?
So there can be a slight tracking difference.
Okay, so even though an ETF is designed to track something like Bitcoin,
Right.
its price might not move in perfect sync
Exactly.
with the actual price of Bitcoin.
Yeah, it's a small difference, but it's something to be aware of.
That makes sense.
And then with those futures-based ETFs,
Okay.
things get even more complicated.
In what way?
Because remember, those are investing in contracts that are basically betting on future prices.
Right.
So there's that extra layer of potential difference between
Yeah.
the ETF's performance and the actual crypto's performance.
So it's not a foolproof system by any means.
Yeah, exactly. You want to do your homework.
Okay.
Understand the specific ETF you're thinking about.
Got it. What about those crypto ETPs?
Okay.
Are they essentially the same story?
Well, as we discussed, they have some unique characteristics.
Yeah.
They fall under different regulations than traditional ETFs,
Okay.
which could mean less diverse portfolios.
So less diversification equals more risk.
Exactly. It can be a double-edged sword.
Okay. How so?
Well, it increases the risk, but it also allows those ETPs to be more targeted
Okay.
and capitalize on very specific opportunities within the crypto market.
Can you give me an example?
Sure, like a spot Bitcoin ETP.
Yeah.
Might offer more direct exposure to Bitcoin's price movements
Yeah.
than a more diverse crypto ETF that includes a bunch of different assets.
So it's a higher risk, higher reward situation.
Potentially.
Something to definitely consider.
For sure.
Okay, let's move on to cryptocurrency and
Mhm.
blockchain stocks.
Okay.
Those seem like a completely different approach.
Yeah, it is a different approach.
Okay.
Investing in crypto-related stocks is less about tracking those prices of cryptocurrencies directly
Okay.
and more about supporting the companies and the technologies that are kind of driving this whole crypto revolution.
Got it.
It's a way to get involved in that industry's growth
Okay.
without actually holding the digital assets yourself.
So like we were talking about before, it's like investing in those picks and shovels
Exactly.
during a gold rush.
You got it.
You're investing in that infrastructure
Mhm.
and the innovation,
Mhm.
the companies that are potentially building the future of finance.
Right.
That sounds really exciting,
It is.
but I'm sure it comes with its own set of risks.
Oh, absolutely. Cryptocurrency and blockchain stocks can be just as volatile,
Okay.
if not more so, than the cryptocurrencies themselves.
Wow.
The market is still relatively new,
Yeah.
and it can be affected by all sorts of things,
Like what?
like changes in technology, regulations, even just public sentiment.
Right. So it's not for the faint of heart.
For sure.
So what types of companies are we talking about here?
So you've got companies like Riot Blockchain, Canaan Inc., and HIVE blockchain technologies,
Okay.
all involved in crypto mining.
Okay.
They're using powerful computers to solve really complex math problems
Wow.
and earn crypto as a reward.
So they're like the digital gold miners of the
Yes.
21st century.
Exactly.
That's really cool.
And then you have companies like Coinbase,
Okay.
which operates a major crypto exchange.
Okay.
They provide a platform for buying, selling, and trading crypto.
Okay.
And their success is closely tied to how the crypto market's doing.
That makes sense. So if more people are trading crypto, Coinbase is making more money.
Exactly.
And then if the crypto market takes a downturn, Coinbase probably feels that too.
Yeah, they're definitely along for the ride.
Interesting.
And don't forget about companies like PayPal and Square,
Oh, yeah.
which have integrated crypto services into their platforms.
Interesting. So they're not solely focused on crypto,
Right.
but they're playing in that space.
Exactly.
So there's a whole spectrum of companies to consider.
Yeah, for sure.
Should I just be throwing a dart at a board and seeing what sticks?
I wouldn't recommend that.
Okay.
Just like with any stock investment,
Yeah.
it's crucial to do your research,
Okay.
understand the company's business model,
Mhm.
their financials, management team, and their overall strategy. You don't want to just pick a company because it has blockchain in the name.
So it's all about understanding those fundamentals,
Yeah.
making informed decisions.
Exactly.
I imagine diversification is just as important here as it is with ETFs.
Absolutely. Don't put all your eggs in one basket,
Okay.
especially in this space.
Right.
Spread your risk across multiple companies,
Okay.
multiple industries within the crypto world.
Yeah.
And remember, this is a high-growth, high-risk area,
Right.
so it might not be for everyone.
So find that balance
Exactly.
for your own risk tolerance
For sure.
and financial goals.
Mhm.
You mentioned earlier that there are ETFs that focus on crypto and blockchain stocks.
Yeah.
Can you tell me a little bit more about those?
Sure. So just like there are ETFs that track cryptocurrencies directly,
Yeah.
there are also ETFs that invest in a basket of companies
Okay.
that are involved in that crypto and blockchain space.
Okay.
So it's an easy way to diversify
Yeah.
without having to research and manage all those different stocks yourself.
So it's like a one-stop shop for
Exactly.
the crypto ecosystem.
It can be a great option
Yeah.
if you don't have the time to
Yeah.
get into all those individual companies.
It definitely simplifies things
It does.
considerably. Are there any specific crypto stock ETFs that you'd recommend?
Well, I can't give specific investment advice,
Of course.
but I can tell you there are some reputable ETFs out there.
Okay.
Some examples are the Amplify Transformational Data Sharing ETF, BLOK,
Okay.
the VanEck Vectors Digital Transformation ETF, DAPP,
Okay.
and the Global X Blockchain ETF, BKCH.
All right. I'll jot those down.
Mm-hmm.
Do a little more research.
Yeah, remember, always do your own research
Of course.
and due diligence before investing in anything.
Right. So we've got ETFs that track crypto directly,
Yeah.
ETFs that hold those crypto stocks.
Right.
We talked about individual stocks and crypto mining,
Yeah.
exchanges and payment processors.
Mhm.
Is there anything else in this indirect crypto investing world?
Well, we can't forget about incorporating crypto into those retirement savings.
Oh, yeah.
Remember when Fidelity made that big move to allow Bitcoin in 401ks?
Right. That was huge.
Yeah,
Definitely made headlines.
for sure.
It seems like it really signaled that growing acceptance
Yeah.
of crypto as a legitimate investment,
Mm-hmm.
even for retirement planning.
Right. But it's important to note that not all 401k providers offer this.
Yeah.
And there are still some regulations and stuff to figure out.
Right. It's definitely a trend to watch.
Yeah.
Imagine telling your grandparents that you're holding Bitcoin in your retirement account.
Right.
That would have sounded like a joke a few years ago.
Oh, exactly.
But the world is changing,
For sure.
and crypto's a big part of that.
Definitely.
Before we move on, I do want to circle back
Okay.
to those credit card rewards.
All right.
Because earning crypto by swiping my card still kind of feels like magic.
I get it.
Can you break that down for me one more time?
Sure. Basically, credit card companies are trying to attract new customers, stand out in the market,
Okay.
and offering crypto rewards is a way to do that.
Okay.
It's an alternative to those traditional cashback or points programs.
So instead of getting 1% cash back on my purchases,
Right.
I might get 1% back in Bitcoin.
Exactly. Or Ethereum,
Okay.
or some other cryptocurrency, depending on the card.
Okay.
And some cards offer even higher rewards
Oh, wow.
for spending in certain categories,
Got it.
like dining or travel.
So it's like getting a bonus
Yeah.
with every purchase.
Exactly. And that bonus has the potential to grow
Right.
if the crypto market does well.
And it's a relatively low-risk way
Mhm.
to get into crypto.
For sure, you're not investing a ton of money up front.
Right.
You're just earning those rewards on your everyday spending.
So you're testing those waters
Exactly.
without diving headfirst into the deep end.
Right. Of course, it's important to remember that the value of those cryptocurrencies can fluctuate.
Yeah, for sure.
So your rewards could be worth more or less,
Okay.
depending on the market.
Right. But fluctuations are a reality with any rewards program, I guess.
Yeah, for sure.
Airline miles lose value.
Right.
Cash back is affected by inflation.
Mm-hmm.
It's all about understanding those risks
Exactly.
and potential rewards.
Yeah. And speaking of risks and rewards,
That's right.
I think it's time to dig into the overall risks and considerations of indirect crypto investing.
Okay. Are you ready for that?
I think so.
Okay. So we've explored all these different indirect crypto investing options.
Right.
ETFs, stocks, retirement accounts, even credit cards.
Yeah, it's a lot.
But I feel like we've only just scratched the surface here.
Yeah, for sure.
So what are the essential things to keep in mind
Okay.
when navigating this whole landscape?
Yeah.
And what are some potential pitfalls that we should be aware of?
So while the potential rewards of crypto investing can be really exciting, it's super important to approach it with a balanced perspective
Okay.
and understand the risks.
Okay, so let's talk about those risks. What are the biggest red flags investors should watch out for?
I think the biggest one is volatility.
Okay.
That's inherent to the crypto market. Whether you're investing indirectly through ETFs, stocks, or earning those crypto rewards,
Right.
the value of those assets can change drastically,
Okay.
sometimes in a matter of hours.
Wow.
So you got to be prepared for those ups and downs.
Yeah.
And only invest what you can afford to lose.
So strong stomach
Yeah.
and a long-term outlook are essential.
For sure. What about diversification?
Yeah, we talked about it with ETFs.
Right.
Does that apply to these other indirect investing strategies?
Absolutely. Diversification is key no matter what you're investing in.
Okay.
When it comes to crypto, spreading your risk across different methods, asset types,
Okay.
even different companies within that crypto ecosystem
Yeah.
can help reduce potential losses.
So don't put all your crypto eggs in one basket.
Exactly. Spread the risk. Spread the potential rewards.
Okay, what about fees? Are those something to be particularly cautious about with indirect crypto investing?
Fees are always something to consider no matter what you're investing in.
Right.
With indirect crypto investing, it's important to understand those expense ratios of ETFs, trading commissions on stocks, and any other costs associated with those platforms or services you're using.
Okay.
Those fees can really add up over time,
Right.
so factor them into your overall strategy.
So read the fine print,
Yeah.
compare the costs.
Mm-hmm.
Don't be afraid to ask questions.
Exactly what other factors are on your mind?
So I'm also thinking about regulation.
Okay. Yeah.
This crypto landscape is constantly evolving,
Mm-hmm.
and it seems like regulations are still being developed and implemented.
For sure.
That can be a little unsettling.
It creates uncertainty and can impact your investments.
Yeah.
So stay informed about potential changes.
So it's not a set it and forget it type of investment.
Right. You got to stay on top of things.
Yeah. Okay, what about security? We hear about all these stories of hacking and scams in the crypto world.
Right.
Does that apply to indirect investing too?
Security is so important with any investing,
Yeah.
especially when it comes to digital assets like crypto. Whether you're investing directly or indirectly, you need to understand those security measures
Okay.
of the platforms and institutions you're using. Choose reputable platforms
Right.
that have strong security protocols.
Yeah.
And watch out for those phishing scams or any requests for personal information
Got it.
or access to your accounts.
So strong passwords,
Yes,
two-factor authentication,
absolutely.
and a healthy dose of skepticism are a must.
For sure. It sounds like there's a lot to consider.
Yeah, there is.
Don't let that scare you away, though.
Okay.
The key is to be strategic.
Mhm.
Understand the risks and rewards.
Right.
And make sure every decision aligns with your financial goals.
Right, and your risk tolerance.
Exactly.
It's so easy to get caught up
It is.
in the hype of a new investment opportunity.
I know.
But taking a step back
Mm-hmm.
and really assessing how it fits into your overall financial picture
Yeah.
is so important.
Couldn't agree more. And remember, this is just the beginning of your crypto journey.
Yeah,
There's so much to learn and explore.
it's exciting.
It is stay curious, stay informed, and never stop asking questions.
I love that. All right, so we've covered a lot today,
We have.
from ETFs and stocks to retirement accounts and even those credit card rewards.
Yeah.
I hope you're leaving this deep dive
Hmm.
feeling a little bit more informed
Yeah,
and empowered to explore this world of crypto investing,
for sure.
even without buying Bitcoin or other cryptocurrencies directly.
The possibilities are really endless.
Yeah,
It's amazing to see how crypto is changing the financial landscape.
it really is.
It's a journey full of opportunity and challenges,
Mhm.
and it's up to each of us to decide how we want to participate.
Well said. Well, thanks for joining us on this deep dive into the world of indirect crypto investing.
Thanks for having me.
We'll be back next time with another fascinating topic to explore. Until then, keep learning, keep exploring, and keep that curiosity burning bright.